Bitcoin crashed, there it is. Is this it then for crypto, or was Friday's Black Swan event the reset we needed? Let's walk through it together. Hi, this is Paul with ArcisFX with your Bitcoin update for the week. Firstly, this is the Black Swan event which Bitcoin experienced on Friday along with the rest of the crypto market, and this is diagonal support where the price action bounced off following the crash. But before we dive into exactly what happened, let's just offer a little bit of reassurance by looking at the big picture, which can really help offset the fear and uncertainty which some people may be feeling following a Black Swan event if you're not initiated to these sorts of crashes. So this is Bitcoin monthly, and this is our primary trend line, which is perfectly intact, no big issues. In fact, the crash doesn't even really register on this, the monthly time frame. And in terms of where we could be going, this orange line on the RSI here represents the bull cycle tops. Very overbought conditions for Bitcoin at these key junctions in its life. Here we are at 2013, here we are 2017, and in April 21, the first of the bull cycle peaks for that cycle. And you can see we are nowhere close to those conditions yet. And even though this crash was the biggest liquidation event in crypto history, the second most likely being from February this year, something which we might see more of given the sheer amount of money now which is involved in Bitcoin. The reality is that crash, when you look at the monthly timeframes, doesn't quite fit the bill. So we've had a correction for sure, and we've had an event which caught everybody off guard. But the reality is that Bitcoin is still perfectly bullish. Primary trend hasn't even been tapped yet. So it should be onwards and upwards from here. Now, could we have a deeper retrace to around 90 and have the primary trend still intact? Yes, we can. Is that likely? Probably not, but we could see that and still maintain the bullish momentum. You'll notice here when Bitcoin crashed down to, at the back end of the bear market, hit around 16, 15K and then bounced off this trend line. And it did the same at around 26K back in September 2023. Then we had all the ETF stuff. So a retest of this level would be perfectly healthy before a move up. But I'm not 100% convinced we're going to have that sort of retrace. But even if we did, you can see that Bitcoin has got plenty of room to go down without turning bearish. And if we just look at this Bitcoin one-day golden Fibonacci paired with 2-week stock RSI chart, a bit of a mouthful, you can also quite clearly see that the previous cycle tops have been the green line, the turquoise line, the red line. Now, arguably that the pandemic bull cycle was a bit muted, and therefore maybe if it wasn't for the pandemic, Bitcoin could have made it all the way up to the green line, which would have been about 95, knocking on 6 figures, but we didn't have that. But if you presume the law of diminishing returns and that this cycle is only going to top the purple line, then that is still 190 odd K, which we are nowhere close to reaching just yet. And again, you'll notice that we have overbought conditions on the stock RSI every time the market peaks, and we're nowhere near that. So just a little bit of bullish perspective, just a bit of reality check for everybody that everything is still perfectly fine. And the parabolic curve which Bitcoin has been enjoying also remains intact, with potentially this being base 4 with the largest of the moves yet to come, which could take us again. Look, there's that 180,000 mark at the 2.618 fib level. But the most interesting thing to point out about this chart is we have some time-based fibs as well. And you'll notice that every time the price action bumps up against these time-based fibs, we have a rally. Here we go again in September. We have a rally. Here we are again in September 24. We have a rally. And here we are once more at the 100% time-based fib with this nice little pocket, and we could now see a rally up from here based on this simple chart. So perspective on the crash on Friday, it caught a lot of people off guard, quite a lot of people lost some money, but I wasn't one of them, as experienced crypto traders typically will have money on the sidelines to benefit from these crashes, and I ended up making quite a lot of money as a result. And this is ultimately where we want to be as crypto traders. We don't want to be fearful of these Black Swan events. We want to be able to capitalize on them, and the V-shaped bounces and the quick recoveries which occur can make people 25%, 30%, 50% in just a few minutes, which is exactly what happened to me on Friday. So you can't predict these events, but you can prepare for them. And this should be seen currently as an opportunity to get some low prices until we see other bearish signals. And as we've already established, Bitcoin's primary trend is fully intact, and there's no threat at the moment of any long-term bearish conditions for Bitcoin. But this is Bitcoin's 6-hour chart, and as you can see, we've had an almost complete reset following the bullish move which started at the end of September. But this is also the reality check for you. Everyone down here was talking about how Bitcoin's making moves and it's recovering, and everyone's now talking about all the bearish narratives. But the reality is, this is where we were, lower than we are at the moment, at around 108, 109K back at the end of September. And we are above that point today, now, following this run-up. And because this run-up was so fast, was so unsafe, wasn't particularly organic, this sort of house of cards reaction where we're crashing back down exactly where we took off from is perfectly normal. It's expected. Now, obviously, a lot of things contributed to this, and if potentially we didn't have the news out of the United States with regard to a potential reignition of the trade war with China, then maybe the crash wouldn't have been so sudden and it would have been a little bit more gradual. But nonetheless, we had that news, we had that event, it shocked the market, people looked to take advantage, and here we are again. We've bounced off diagonal support, which was essentially the bullish breakout point for this rally on the 30th of September, and now it looks like we're trying to form a reversal patterns of sorts. We got rejected by the 200 MA on the 6 hour, and now we're coming back down to try and find our feet with maybe a double bottom. Now, this isn't a double bottom yet, but it could be. So ultimately, this is the line which Bitcoin needs to cross to confirm that. Otherwise, there could still be some more downside. So we still need some more price structure, but ultimately, this is the sort of thing we need to be looking for: a double bottom, a reversal pattern, a W of some kind, in order to confirm a move up and that there's no further downside ahead. So this is Bitcoin 12-hour chart. We had this bull flag previously printed, and of course it broke to the downside. Obviously, if it went to the upside, people will start looking for long positions, but breaking to the downside is obviously the signal that the market is going to crash. Now, the problem is that this happened very quickly. This candle represents 12 hours of trading, but what was happening essentially was the price action broke down. Let's just zoom into the 1 hour chart. Bitcoin has started to break down from this bull flag to the downside, and just as we were reaching around 118k and fighting for that level, but then we got some news out of the United States which shocked the market, and then down we went. And that's it. Really straightforward. The news of the potential reignition of the trade war with China happened exactly as Bitcoin was trying to wrestle with 118k and find its feet. It couldn't do that as a result of the news, and then of course it crashed. So the timing of the news could not have been worse, as Bitcoin was in a very vulnerable position as buyers and sellers were trying to decide on whether we were going to have continuation or further downside from here. Now, the reality is that this was such a strong run up, it wasn't very organic, that a retrace was perfectly natural. The last couple of Bitcoin updates we've been talking about that this move was a bit like a house of cards. But nonetheless, the news event did add a serious degree of shock to the market, which has caught a lot of people out. And you can see with Bitcoin, it's bounced straight off the 1 day 200 MA around this 107k level, and now Bitcoin is trying to find its feet. And if we just zoom in, there is some bullish divergence which has just popped up between the price action and the RSI, but you'll notice here's the bounce off key support around 107.5k, and we did manage to make it back above this diagonal trend line, but we couldn't hold it as we ran straight into the 4 hour 200 MA, and now we've come back down. But now as a result, we've got some bullish divergence, which is the first kind of bullish signal we've had since Friday. But you have to presume that a move back down to key support is on the cards, maybe to retest the bounce point from the crash, and then maybe more buyers will enter here. And this divergence is fine, but it could very quickly be invalidated. Ideally, what we need to see, of course, is we need to see the price action get back above this diagonal trend line and make its attack of these resistance areas one by one. But essentially, we just need more price structure at the moment. We can't be trading off this bullish divergence yet. We need to see Bitcoin's price action settle. We need a few more days to see exactly what's going on. Are we going to recover from here? Is this the bottom, or are we going to roll over to lower levels? Maybe this range low point of control at 105. So after these crashes, you do need the market chance to settle, especially when there's still some inhibiting news events coming out of the United States with the government shutdown. And this is just a cleaner look. This was the line in the sand which confirmed the bullish break back in the end of September, which led to this rally, and we are essentially back down right at that level at the moment. But of course, this, where we come from here, is very important, because buyers will be thinking, well, the price action can very easily just roll over like this. So they have to be very wary of that. Therefore, we need to see the price action come back down, give us that higher low, maybe give us a reversal pattern, a double bottom, come back up, and then start to recover some of these previous support levels, which are now, as you can see in the red on my chart, resistance. And also, the interesting thing to note is that a lot of the levels which we were respecting previously have shifted slightly as a result of the different positions the moving averages are in. So you'll notice here at around 115k, that was previous resistance for the price action, but now it's definitely 116k, as these moving averages have essentially swapped over, with now the 4 hour 200 MA acting as resistance and not support, and the daily 50 MA acting, or previously was acting as support, until Bitcoin, of course, understandably couldn't hold it. So the key levels to watch has shifted. 116k is a significant line in the sand, especially if Bitcoin forms a double bottom from here, as that would be the neckline. But then, of course, right above 116k, we've got 118k, which again was very powerful resistance, which wasn't properly checked on the previous rally on the way up. So Bitcoin's got a lot of work to do, and if we can hold this level at around 110k, again, the previous breakout breakout point following the last retrace, then we might just expect Bitcoin to cycle around here for a little bit until the sellers finally get exhausted and buyers start taking control again. So we do need more price action, and I'd be very cautious about entering positions at the moment until we have that clarity. And just to check in with Bitcoin dominance daily, here is arguably the previous biggest liquidation event in history back in February before this latest Black Swan event. And you can see here a very similar reaction from Bitcoin dominance as people's positions get liquidated and they exit the market voluntarily or otherwise. This essentially was the line in the sand which we were previously watching for Bitcoin dominance. And now, thankfully, the indices action is back in that area. So Bitcoin dominance has retraced right back down to here. And if you look at this liquidation event which happened, it took a while for the indices action to actually come back down to where it launched from. But already we have come back below the launching point of the Black Swan event. We've essentially had a nice little reset, meaning that all we need now is Bitcoin dominance to just start coming back down here to show that people are re-entering their positions again. So quite telling that we could have quite a strong recovery once Bitcoin finds its feet in terms of what the money flow is telling us. But of course, the direction this goes from here, whether it finds its feet and ascends upwards, which wouldn't be great for altcoins, or whether it, as we just said, descends downwards, will very much depend on Bitcoin's posture. If Bitcoin starts to show a bullish posture and a recovery, then people will enter their positions and you'll find Bitcoin dominance starts to come back down again like this. So those are the lines in the sand to watch. Ideally, we want to see Bitcoin dominance below around 59% for bullish continuation for altcoins. And just to touch base with total 3, this is total crypto market cap minus Ethereum, including stablecoins. I've redrawn this triangle pattern slightly, and this is the crash. Came back down and essentially tapped this diagonal support level and recovered all the way back up here. And now we're putting in a bearish retest currently of this triangle. So this index is suggesting that we could have some more downwards movement over the next few days, which supports a bit of a bearish scenario for altcoins. But if we have a look at total 3 ES 5-day, which is a new index, which essentially excludes Bitcoin, Ethereum, and stablecoins, as that market has got quite big now, we are still in this bullish ascending triangle pattern quite comfortably, and a little bit more of a retrace for the altcoin market would still keep the bullish momentum alive, and then ideally we want to see a break from here. So not looking terrible on the indices, but ultimately it is a waiting game now for Bitcoin. But if you do want to have a little bit more insight into what was happening at the Black Swan event and how you can mitigate some of the risks as a trader, please check out the live stream which I did on Sunday, the emergency special Black Swan event live stream, which discusses all of these issues in a lot more detail than I can fit in a short video like this. But that's it for now. I'm Paul with ArcisFX. Don't forget to like, subscribe, and drop us a comment. Let us know how you fared on Friday, and I'll be back on Thursday for altcoin picks and Friday for my weekly live stream where you can of course ask questions, get me to check out tokens you're thinking of trading, and see how Bitcoin is doing at the back end of the week. Also, if you're not already in our private group, you can check out a link in the description, as we would love to have you. Catch you in the next one. Stay safe this week.